Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 15th, 2025, and we're diving into Celcuity's second quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Celcuity, a clinical stage biotechnology company, has released its Q2 2025 financial results, and there's a lot to unpack, especially with their ongoing clinical trials and financial performance.
Revenue and profitability overview. And let's start with the financials. Celcuity reported a net loss of $45.3 million for Q2 2025, which is a significant increase from the $23.7 million loss in the same quarter last year. John, what are the key factors driving this increase?
The increase in net loss is primarily due to a rise in operating expenses, which jumped to $44 million from $24.3 million in Q2 2024. This is largely attributed to higher research and development costs, as well as increased general and administrative expenses. The adjusted EPS came in at -93 cents, slightly missing the forecast of 90.
Clinical trials and strategic initiatives. Celcuity has been making strides in its clinical trials, particularly with the Victoria-1 trial. Can you elaborate on the recent developments and their significance?
Absolutely. Celcuity reported positive top-line data from the PIK3CA wild-type cohort of the Phase 3 Victoria-1 trial, showing a significant reduction in the risk of disease progression or death. They plan to submit a new drug application for gidatolisib in Q4 2025. Additionally, a new patent extends gidatolisib's exclusivity to 2042, which is a strategic win for the company.
Financial position and funding. Financial stability is crucial for a biotech company. How is Celcuity positioned in terms of cash and funding?
Celcuity is in a strong financial position, with $455 million in cash, cash equivalents, and short-term investments on a proforma basis. This includes $286.5 million raised from recent offerings. The company expects this to fund operations through 2027, providing a solid runway for their ongoing and future clinical trials.
Key takeaways. In summary, Celcuity is advancing its clinical trials with promising results, despite a larger net loss this quarter. Their financial position remains strong, supporting their strategic initiatives. John, any final thoughts on Celcuity's investment prospects?
Celcuity's focus on innovative cancer therapies and their robust financial backing make them a compelling prospect in the biotech sector. However, investors should be mindful of the inherent risks in clinical trials and regulatory approvals.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Celcuity's performance in the comments below.